Hello and welcome to another update video about Bitcoin. Wow, what an uneventful weekend, and also Monday didn't really lead to anything. So maybe we'll see a little bit more action today. Let's see what happens when the US stock market opens. Typically we see a little bit more action around that period. Let's talk about the two scenarios that we're dealing with here on the daily chart. They have of course not changed, but I have received a lot of requests for covering the daily chart. But I do that once a day anyway, so feel free to look through the videos. Typically in the beginning, one video a day, I cover the daily chart, and the weekly hasn't changed anyway. So this is still interesting here, the daily chart, in which we are dealing with a situation in the white count, in which we have an aggressively bullish scenario with a combined 1-2-1-2 setup down here. The second 1-2 setup bottomed in September last year, and we basically recently completed this 5-wave move to the upside, which then is wave 3, circle wave 3, which topped here around 48,900. And the assumption is now that we've already reached the target area or support area for it. The assumption is that the wave 4 is now unfolding, and the wave 5 should happen afterwards. Okay, can take us to 60, 65k. Then a larger degree fourth wave and a fifth wave, and it should sort of send us higher, going forward. And looking at this entire structure, this is sort of what I'm watching for, the more direct pathway to the upside, as long as the price holds above 35k. I think this is a likely scenario. It's just important to understand what's the relevant pivot that decides between this scenario and the yellow one. The yellow one I actually would like to see. It's just that we cannot really confirm the yellow one until the yellow box breaks. Why would I like to see the yellow one? Because it just allows for a deeper pullback and allows for the accumulation of BTC at lower prices in a bullish market. It's a deeper pullback. It's basically in line with a scenario that typically before the halving there has been a sell-off. And that would be our B wave scenario, in which the market is currently in an A wave. Then there should be a B wave and a C wave, and it can take us into the green box, currently between 31,560 and 19,870. Yeah, it's a scenario I'd like to see, so I can accumulate Bitcoin cheaper, as well as ETH probably as well. However, just because I like to see it doesn't mean it will happen. It literally needs to break below 35k, okay? And it's not that I'm focusing on it. From an analysis point of view, they are both possible, they are both likely scenario. I would never show you unlikely scenarios, and it literally is the 35k level that distinguishes between the two. And from a trading or investing point of view, it makes sense to prepare for them both. Okay, so but they are both bullish at the moment. They are both bullish. There's only the only level where I can really say that the bear market has started is at 19,870. Okay, so in the yellow scenario, obviously the idea is that we rallied in 3 waves from the 22 lows, okay? There are people online who say that because of the 3-wave move up, it's bearish and we have to move to new lows. What they miss is that this can all be part of a larger diagonal. So context is always important in Elliott Wave, because we're dealing with a larger degree 5th wave. Oops, where are we? 5th wave. It can all be part of an ending diagonal. So again, just an ABC structure is not necessarily bearish, especially not when it's part of a larger diagonal. Okay, so that's important to understand. Also, there are many bullish support levels along the way before we really go bearish. So that's just what the perma bears need to realize. But they are just often missing the context. Now, I'm not saying we couldn't get to new bear market lows. We can, but you cannot focus on that as long as we hold above 2 massive bullish support areas. Okay, it will only become clear once support breaks. And therefore, I often say, let's just focus on what we see. Live in the present, trade in the present, okay, instead of creating panic. Okay, so let's take a look at the shorter time frame, because I think this is sort of clear, parameters are clear, and the bull market target is around $125,000. That can still change a little bit. It depends on how, for example, if we follow the white count, how the subdivisions develop. But that's sort of a good idea, that we have a good idea where it might be going. Now, looking at the shorter time frame, honestly, nothing happened over the weekend. Nothing happened yesterday. other than a little bit of intraday volatility, but not even a lot. So on Friday, obviously, Bitcoin dropped in quite a direct fashion in this potential A wave, completed this third wave on Thursday here at around 48,900. And because the third wave completed, well, or as I said, maybe the A wave, but we won't be able to say that or confirm that until the market breaks below 35K. Either way, we are now in a correction. So it depends on how this correction unfolds. Okay, we will maybe be able to make a call along the way if we're in the white or the yellow count. The yellow count obviously taking us down below 35K, but it's way too early for that. For now here, from an analysis point of view, I'm focusing on the white count until it breaks. So either way, the idea is that we are now in an A wave and it could still get one more low. I mean, this section here still looks a bit like a bearish flag or bearish pennant. Certainly nothing bullish here visible at this stage. The market reacts already to the first Fibonacci level, which is good to see. That's here the 41,800 level pretty much. An A wave, as I said yesterday, can have a 3-wave move or a 5-wave move. So at the moment, as long as we're just consolidating sideways within this range, you can see the 2 trend lines there. It appears to me more likely that we might get a 5th wave, but it's always worth knowing, okay, what's the level that would suggest that we are already in the B wave, okay, because A wave down, B wave up. Now this B wave could, well, it should unfold once we break out of this trend line. That will be around $43,350, right? If that happens, it would suggest that here the yellow count is followed on the micro level, just this WXY structure. Obviously the wave 4 could also be finished, but there's not real evidence for any of those. So we're just in a holding pattern, waiting for the market to make a move. A break to the downside would obviously send the 5th wave down, indicate that we have 5 waves in wave A. That's also my preference at the moment, but just because it's my preference, just because at the moment the market is consolidating sideways, but that can easily change. It's not a strong leaning, but the target to the downside would be around 40,660 to 39,100. But we need to see, to confirm that, we need to see a break to the downside out of that trend line, and the break below that X wave low here at $41,720 pretty much, or 41,700. Then the 5th wave can unfold. Targets are clearly outlined. If we see a break to the upside, it might indicate that this larger WXY is unfolding and the B wave is already unfolding before another C wave down can happen. Now be aware that such a B wave can easily extend. So I just have a placeholder here. Doesn't mean the B wave will finish here. It would in fact be quite a shallow B wave. But for example, if this unfolds as a WXY, that might turn into a larger WXY or even ABC structure. Okay, so that can always happen. B waves can always extend. For now, my view is that if we get a sustained break above 43,350, it might suggest that we won't get a 5th wave down. But this is very much speculative. Corrective structures always change. We've seen it here in this region. And I think we just need to be a little bit patient here. Have a little bit more patience to see how this wave 4 really unfolds. Because since Friday, not really much happened. We don't really have a lot of structure to work with other than here possibly a bear flag, which might give us one more low. But then if it gives us one more low, that might be it. And we get a larger corrective rally afterwards. So either way, I'd like to see that red resistance zone triggered at some point. This is between 44,220 and 47,300. It's the standard resistance zone for a B wave. For now, let's see if we get a little bit of action later today. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, check out our S&P 500 and stock service. You'll find a link in the description just below the video. Thanks a lot for watching. Bye-bye.